and welcome. You're watching the weekly edition of Your Trades. I'm Anisha Jain, and over the course of next 30 minutes, we'll discuss all that transpires through the week, but more importantly, we'll talk about the cues which are lined up for the coming week as well. We'll be joined in the show by Mr. Rajesh Palviya as well as Rajesh Palviya to talk to us about the fundamentals as well as the technicals of the market setup. But before we come to you, gentlemen, let me start by talking about what happened really this week. It started off on a positive note wherein the Nifty hit a fresh 52-week high, plus Nifty Bank hit a record high level. But since then, we saw that the global texture actually changed for the negative, and that's the reason towards the end of the week we started tracking on the downside. And for the week, we managed to end just around the flat down for the Nifty. The other key trend really to watch out for was the underperformance coming in from the broader markets. So if you look at the mid-cap index as well as the small-cap index, they were underperforming quite a bit. In fact, the mid-cap index was down 1.5%, while for the week we saw that Nifty Bank was the clear outperformer because that ended the week with a gain of around 0.8%. And talking about outperformance, it was clearly coming in from the PSU banking space because that was one of the key sectors that was holding in the green with a gain of almost 2% or just around that 0.37% mark as far as the 7 days concerned. But if you look at the week, this week itself, there was a gain of around 1.5% on that one. What was losing? It was autos that was coming under pressure. Energy did not have a great week. Pharma was also under the weather, and also if you look at the entire FMCG and consumption basket, these were the sectors that were trending the markets lower. On the gaining side, we had Kotak Mahindra Bank, which ended the week with quite a bit of gain. Hindalco managed to end the week with quite a bit of gain as well. Plus the likes of Union Bank and Hindustan Zinc were also quite excited. On the losing side, it was Coal India which was coming under pressure. Mahindra and Mahindra from the broader markets, names like Sun TV were also quite active. And not to forget the entire mayhem that we saw in the new age tech companies, because for the week we have seen Paytm decline 14%, plus the likes of Nykaa, etc. were fairly volatile as far as the entire week goes. But to understand what's likely to happen next week, let's welcome on board the gentlemen Rajesh Palviya as well as Ajay Bagga. Rajesh, first let me come to you. We were all preparing ourselves for the fact that it is going to be a fresh record high for the Nifty this week. That really didn't pan out. But in the coming week, should we expect that, or do you think there are cues now which have turned for the worse?
So I good afternoon. So fever went up to 18,400 level, almost near to the all-time high level, and some profit taking on the higher side. But still, looking at the setup for Bank Nifty, we are confident that now Bank Nifty is in the position that can give support to the Nifty also here. And looking at the Nifty setup also in today's session also, we have seen a dip near to 18,200 in smart recovery, especially in last half an hour of trade. Is clearly giving us indication that for this coming week 18,100, 18,200 protractor base is clearly showing that that support is going to work for this November series expiry. And looking at the setup, we are confident that next week we are going to have almost a trajectory of 18,450 to 18,500 for the Nifty. So we are on the buying side for the market, and we are keeping our stop losses at around 18,150 to buy any minor dip which is coming in the market. And for Bank Nifty, again we are bullish, and looking at the setup, till Bank Nifty is holding above 42,200 on the closing basis. The trade setup is on the buying side, and looking at the setup, once Bank Nifty manages to cross above 42,650, then one round of short covering we can see in the market, and then Bank Nifty can scale up to the level of 43,200, even 43,500 in the continuation of this uptrend. So we are bullish for both the indices. Still trend is positive. Some profit taking is there, but still overall trend is looking bullish for coming week and for November series.
That's the clear strategy coming in from Rajesh Palviya, and overall the trend continues to be on the upside both for the Nifty and the Bank Nifty. Ajay, hi, good afternoon. Thank you so much for making time and speaking with us. Well, the all-time high levels are purely academic in nature, right? Because the consensus seems to be that banking are in a very sweet spot. They seem to have hit a purple patch when it comes to the credit growth. But the question is, where do you see the value emerging? Because a lot of the private banking names are already sitting at quite a bit of high valuation. Which are the stocks which you still think have value and make a good investment bets?
Anisha, I would rather, answer you from a more macro perspective. Seasonality is working for us in these 2 months. Normally, October to January is the best period for the markets. but I'm expecting one sell-off more to come in global markets, which will impact us as well. The inflation has gone down, but it is still largely in the developed markets. It's very much a large distance away from the targets of the central bank. So it will come back simply to don't fight the Fed. We are expecting rates to still go up. We are expecting rates to be hiked for longer and to stay higher for longer. And secondly, the Fed, the unstated objective will be to tighten the financial conditions, both of which normally don't work well for emerging market flows. So we might see all-time highs even on the Nifty being crossed in this period. But going into January, I'm expecting a small correction, and I'm not very optimistic about the markets nor about the earnings globally. India, we have seen pretty good earnings, leave aside metals and oil and gas. We saw a very good quarter, much better than expectations. Going ahead also, expectations are good. But, given 35-40% of revenues are coming from global, players, it won't be so easy for us to shrug off any global slowdown. I think that's where the issue is. So in that kind of a scenario, you have to be domestically focused, focus on domestic oriented companies. On a contrarian bet, you can look at anybody that makes money from Europe, because UK-Europe recession is a very high probability. UK is probably already in a recession. Yeah, Europe also is supplying to them will go down, and that would be one contrarian bet. The second would be IT. Global IT is hurting. The non-profitable companies, of course, are off about 80% in terms of the non-profitable tech index. The top five FANG stocks have lost $4.7 trillion of market cap. So we will see that spread to our IT companies also. I would say a quarter to 2 quarters from now, our IT companies could be flashing buys. So you can start taking small positions there. So financials as the center of plate, domestic cyclicals, and IT as a contrarian play. European suppliers amongst the auto companies, amongst the IT companies as contrarian plays.
Okay, so that's a contrarian bet coming in, and Ajay is expecting that there is perhaps going to be one more dip before perhaps we see that Santa Claus rally as well. But the other space which has been buzzing throughout this week and over the last couple of weeks, Rajesh, has been this entire railway capex theme, right? We saw how the stock of RVNL surged as much as 50% in the last 20 days itself, plus the likes of Aircon, etc. were quite excited. Is there any name from this entire railway capex theme that you would want to flag out on the chart basis?
Price action, we have seen entire railway space, and RVNL is clearly outperformer. And looking at the setup, we feel furthermore upside we can see in coming weeks. So RVNL, we feel that one can again buy if any action comes in the stock in coming weeks. So it's again, if it comes near to 60 or 59 level, is a buying opportunity. Keep stop loss of around 57, and upside we are expecting around 70-75 level. For Econ, again, there is a clear breakout of the weekly chart. The multiple resistance zone breakout has been done for this week closing. So looking at the setup, if stocks continues to hold above 54 level, then another upside we can see in the stock towards 65 to 70. So Econ is also a buy from the other side. And one stock that is Titagar Wagon, TWL, can be also looked at. Slowly steadily stock is now approaching towards its swing high of September 2022. So looking at the setup, we feel that once stocks manages to cross over 174 level, then possibly this stock can rally higher towards 190-95 zone. So TWL Titagar Wagon is also a buy with stop loss of 166.
Still quite a few opportunities available when it comes to the railway capex theme, and Rajesh was just flagging out the target prices for a couple of them. We'll do one thing, we'll slip into a very short break, but don't go anywhere. We'll discuss the events which are lined up for the coming week, plus ask the market experts what are the top picks when it comes to the coming week as well. Stay tuned for that. Welcome back. You're watching Your Trades. Let's talk about the cues which are lined up for the Indian markets in the coming week. And top of the heap is the fact that there's going to be monthly options expiry. So there is that bit of volatility that will come into the picture. Plus, FOMC minutes will be out on November 24th. So that will be important to track to just understand whether this 75 basis point rate hike cycle will continue or will it temper down to 50 basis point as the street largely expects. Separately, in the stock-specific action, we have the lock-in period of delivery which ends in the coming week, plus LTI as well as Mindtree merger will really fructify on November 24th. So Mindtree will get delisted, plus the close adjustment that is expected to happen on MSCI is something that will happen in the coming week. Plus, there is an HDFC meeting as well, wherein the shareholders are likely to discuss the amalgamation. So that's the other key to watch out for. As far as the upcoming lock-in dates are concerned, that is up for you on the screen as well. So a lot of supply is expected to come in. But let's understand more with Ajay Bagga on how should one prepare when all of these lock-ins really opens up. Ajay, this is one thing that we're seeing, that there's a slew of lock-ins which are opening in this month, and that's why a lot of supply pressure has come, whether on the likes of Nykaa or Paytm plus some other counters as well. What is the best way, do you think, for a retail investor to circumvent the volatility around that? Should one stay put or should one sell even ahead of the event itself?
Well, if you're not convinced about the long-term prospects, you can sell ahead of the event. But for a retail investor, Anisha, what is the big problem? A lot of private money has gone public. So private holders who have a 5 to 7 year perspective at most for the duration of their fund, unless they move the asset onto another fund, have gone public at very high valuations. Those valuations have come down. Now, at the expiry of the lock-in, they have a choice whether to roll over and stay put, wait for the price to come back, or they book their losses, and on a historical basis, they are sitting on multiple gains. The funds might also be expiring, so they might not have a choice but to book. So a lot of the booking is coming, and the big question we have to ask is, if such huge smart investors, institutional investors are selling out, why should I as a retail investor be buying what they are selling? So obviously they are not seeing value at the current level, otherwise they would have moved it to some new fund or they would have stayed put. If they are not seeing value, why should I come in? If you are an investor trapped in these stocks, don't try to average down. Just wait it out, but the wait can be very long given where the cash flow situation is and the way funding has dried up for a lot of unprofitable companies. So it's not a very nice situation to be in, but staying put is probably the best. If you have, you can't withstand it at all, then get out of it. And there are much better run companies in India with positive cash flows, with good business models, profit-making models. Get into some of those and make up your money.
Right.
But this might take, Anisha, anything from 5 to 15 years to recover the kind of prices that have gone off.
Wow, 5 to 15 years, that's quite a long time. But yes, as you pointed out, liquidity has dried up, valuations have corrected, plus earnings and profitability visibility is a bit of a question mark. But Rajesh, the other big event that we were talking about is the monthly options expiry, right, in the coming week. What are the levels to track? Where do you see the monthly expiry happening for Nifty, Bank Nifty? Plus, if you can talk to us about the stock picks for the coming week.
We are expecting that Nifty to expire around 18,450, 18,500. But the recovery which we have seen, especially in last half an hour, is clearly giving us sign that we will head further higher from the current level. And for Bank Nifty, we are projecting expiry around 42,800 to 42,900 zone. For that, we have identified three stocks to remain on the bullish side. First is clearly on the banking side, especially we are bullish on PSU Bank. So Canara Bank is looking very attractive. Throughout the week, very narrow price range, but overall setup is positive, and we feel that 330 should be the target in the coming trading sessions. So Canara Bank one can buy stop loss of 300. Another stock is from IT space, and that HCL Tech is looking promising, and especially in last two three trading sessions, we have seen a lot of buying interest in the stock. Today's move is also encouraging. Looking at the overall setup for HCL Tech, we feel that stock can move further higher towards 1160. One can buy with stop loss of 1075. Third stock is from mid cap space, that is Atul Auto. Stock has formed a rounding bottom formation on the weekly chart. Sideways consolidation for last 2-3 weeks, but this week has formed a strong bullish candle. And looking at the price action in this current week, we feel that stock can continue its upward momentum towards 345, 350 zone. So Atul Auto is also buy with stop loss of 308.
Tech, Atul Auto, both are the counters that you have on the positive side. Plus, you're expecting Nifty to expire around that 18,400 to 500 range. But, guys, the other important event lined up over the weekend is the fact that FIFA World Cup is starting on Sunday itself. So that's the big event to watch out for. Plus, you have the fact that there's Drishyam 2, which is getting released. We have seen a lot of advance booking for that already. And it's International Men's Day on Saturday. So that's also something to watch out for. Gentlemen, I'll come to you and ask you about your top bets when it comes to the FIFA World Cup. But first, let me go across to my colleague Sharad. He's done some very interesting analysis on the mathematics of the business of FIFA World Cup. Sharad, over to you.
Well, yes, this mega sporting event will be in focus on Sunday. This will kick off and is the most expensive World Cup ever. Now let's look at the numbers. Almost 60 times the $3.5 billion which was spent in South Africa. And now going ahead, almost 5 million visitors are expected to come in. And also this will be the first time it will be held in the Middle East as well. Now let's look at the important numbers which we have dug up. First one being the expected people to watch. That amount is almost half of the world, 3 to 4 billion people. The total prize money up for grabs, $400 million. Estimated profits for the Qatar government, that is coming in at almost $9 billion. And the inflows expected to come in at almost $17 billion. Now look at what the spending has been there all across the FIFA projects over the years. And we see for Korea and Japan, these numbers were pretty less, coming in less than $3 billion. But then this number started going up from 2006 World Cup onwards. Till 2018, we see the numbers moving up between $4.2 billion to almost $5.4 billion. But the main numbers coming in is for Qatar. That is expected to earn FIFA $6.5 billion if you see for 2020 World Cup as well. Now for Qatar World Cup, we see almost $222 billion has been planned. And if you see the overall GDP numbers coming in for Qatar, that is coming in at $180 billion. So you can see the size of the expenditure planned for this World Cup as well. Now, who are favorites to win? That is something which we dug up. And firstly is the investment strategist Joachim Clement, who has been actually predicting the key World Cup winners for the last two World Cups. And he estimates that Argentina will beat Spain in the semi-finals and also meet England in the finals. Now, for Wells Fargo also, they have also estimated that the best team will be Brazil, followed by a dark horse, which will be Uruguay. And Opta predictions also has come out, which they have stated that Brazil is expected to win. And lastly, for what's there for fans is Reliance Jio will be launching international roaming plans for the plans, and also the Indian HNIs have booked a lot of private jets for the Qatar region.
Okay, so it does look like that the favorites are right now from the South America region, whether Brazil or Argentina. But let me ask you that, Rajesh, is there any sort of technical analysis that you can do in terms of which team is likely to win, or something that you would like to bet on?
I am not actively tracking this, but I would go with Brazil. There is no technical analysis for this. Who will win? So I'll go with Brazil.
Ajay, go on. Are you a football fan? Do you have anything to add?
Yeah, I look like a football also, especially my midsection, and I am a fan. But
Your words,
there
not mine.
yeah. No, it's okay. Goes with the age. There are ELO ratings where they have actually studied since 2018 every player. See, just like
Wow.
IPL, now clubs are stronger. On any day, a top club team will beat any national team. And these guys don't play together also. They come together
True.
for the national tournaments, but they are more club players. So that's where Brazil loses out. They have very great players, but they are better in their clubs than in their national team. But Brazil gets about a 14% probability. Argentina is 14, and then there is a European cluster from Netherlands, Spain, France, England, even Belgium. They are all about at 7%, Anisha. So it's a very open field. Right now, favorites are Brazil and Argentina, but these guys flatter to deceive because they don't play so much as a national team. They more play as clubs. So at the national level, somehow there is something missing unless you get a Diego Maradona who carries the entire team on his shoulders and through to victory and uses his hand as well. Otherwise, it becomes very difficult. But right now, favorites for the betting also is Brazil and Argentina.
But I don't know
So
about
that's the
Maradona, but we at
fundamental.
least have Ronaldo and Messi, and it's going to be perhaps the last World Cup of Messi, so maybe he can go home on a high, and perhaps this might be Argentina's time. Only time will tell. But gentlemen, thank you so much for joining us today. Really appreciate your time, and with that, we're completely out of time on this edition of Your Trades. From the entire team who put this show together, thank you so much for watching, and have a nice weekend.